real estate agents. Welcome to the Weekly Closer. I'm your host, Jeff Underwood, along with my co-host, Joey Sampaga. He's the man with the plan behind the Mac. Behind the Mac.
Booyah.
Booyah. He's the tech guy back there. I haven't taken time out to say thanks so much for what you do. All the editing and everything that you have to do.
Wow.
Yeah.
What's going on, Jeff? Something going on with you?
I don't know, man.
I appreciate it. Well, I appreciate you too, man.
Anyway, let's move on.
Yeah.
Get back to work, you slacker.
Oh, yeah, back to work, slacker. Hey, we've got a great guest with us today, and that guest is Steve Nesselroad with Pinnacle Capital Mortgage. How are you doing, Steve?
Howdy, pretty good. Thanks for having me.
Good. Oh, hey, you know what? Before we get started, we got to take care of the legal stuff.
Oh, yeah.
Because we don't want attorneys calling.
Yeah.
All right, back to you, Steve.
You know, they just don't let us have any fun without doing the work first, do they?
Yeah. There you go.
Steve Nesselroad, Mortgage Loan Officer, NMLS 915050, and Pinnacle Capital Mortgage is a division of Finance of America Mortgage, NMLS 1071.
Wow.
That's pretty good.
That is awesome,
like
man.
a professional.
Yeah,
that was great. You didn't even have to write it down or anything. It's good. Got it memorized. Okay, so now, you ready?
Sure.
Okay, let's see. So why don't we start with telling the agents that are watching and listening how long you've been in the mortgage business and kind of what got you into that crazy world.
You know, like a lot of people, I just fell into it. Actually, it's been 25 years, beginning of this year.
25
just
years.
hit a quarter century. Yep.
Years.
And it happened because I went to school at University of Northern Iowa in Cedar Falls, Waterloo, Iowa, and the two largest employers in town were John Deere Tractors and GMAC Mortgage.
Oh, okay.
And I had a finance degree, so I went over and applied at GMAC, and they didn't tell me that once you're in, they don't let you out.
Didn't want to drive the little green tractors?
No, that was my cousin's job.
Oh, there we go. Did you help get him a mortgage? You probably got paid.
No, I left Iowa too fast.
Oh, got it.
Got it.
No, that is totally cool. All right, so today's topic's a little bit, we obviously with a lender in the house here, it's going to be a little bit different than we normally have. And, I'm excited to hear about this. This is actually about reverse mortgages today. The whole thing is going to be about reverse mortgages. So agents, if you're watching and listening, make sure to listen to the whole episode because Steve is going to really blow your mind, I think, with some of the possibilities behind reverse mortgages. All right, so why don't we start with maybe just explain what a reverse mortgage is?
Well, before we even do that, what's a traditional mortgage? It's a lien on a property, and the loan has to be paid off when the property's sold.
Yeah.
So a reverse mortgage is a lien against a property, and the loan has to be paid when the property's sold.
Okay.
It's in that structure, it's the same. So, and that's the number one common misunderstanding about reverse mortgages is it's just that. It's a mortgage. It's a lien on the property. I still get regular inquiries about the bank owning the home, about the bank, signing your home over to the government, or even the bank buying the home back from you, and that's why you're getting a payment, which, of course, now is no longer the most common structure of it anyway.
Okay.
So, yeah, it's a lien on the property, and that's it. You retain ownership, you retain control of the property, and the loan has to be paid when the property's sold.
Okay.
Well,
so I'm not just signing it over.
That's right.
Okay.
Yeah.
All right, that works. What are some of the other top misconceptions? I mean, what do people struggle with?
And that's
trying to understand.
Yeah, that's always the starting point. I take a very educational approach with everyone I work with, whether it's a referral source or a customer themselves. The payment is the number. Well, the whole reason of getting a reverse mortgage is to not have a monthly payment.
Right.
So if you don't make a monthly payment, which is always your option too, if you really want to, the balance will go up because all the interest that's owed and the mortgage insurance that's owed gets tacked onto the balance. Well, they've made a lot of changes in the last few years and even in the last 6 months that can help slow that down. So people aren't as likely to go upside down, assuming values don't crash again. So.
Right. Okay. Now it's my understanding is it's and maybe I don't have a lot of understanding, but it's probably a specific age range, right?
Yep. I mean, everything we talk about today will assume the borrowers are 62 or older.
Okay.
And for married couples, only one spouse has to be 62 or older to be eligible.
Oh, okay.
One spouse has to be at least 62.
That's right.
Is there an equity requirement too?
That's based on age and value of the property. There's actually a more complicated calculation for it now. We used to have a nice little chart that said, okay, your age is this, the value of the property is this, you're eligible for this amount. Now we've got to stick it into the computer and run the formula because the expected rate, which is based on the 10-year swap rate, now comes into play. The interest rate comes into play as far as how much they're eligible for. So we usually want to structure it to give the borrower the maximum loan amount that they can qualify for.
Okay, all right. And are we seeing most people utilize these for in more of a refinance type position? I mean, the house that they're staying in, they've already owned, right? And
well,
now they're taking out.
That's starting to change. The loan does have to be on your primary residence, and you have to continue to live in that house as your primary residence, or the loan can be called due. But the word is getting out that they can be used for purchases, and that's the other most common misconception is a lot of people can't grasp that concept, or it's a little more difficult to wrap your mind around how you use it for a purchase.
Yeah, that's
when most people think about it as taking cash out.
Okay. So can you explain how that process works?
On the purchase side?
Yeah, on the purchase side, for sure.
So it's a little larger down payment than your traditional purchase.
Right.
Because loan to values at age 62, you're going to be looking at about 42-43% loan to value that you're eligible to get as a loan amount.
Okay.
As you get older, that increases. I just closed one last week for a lady who was 91, and she was up into the 70s, around 70 for loan to value. So
it would be. So an example could be somebody maybe that sold a property in a different state, right? And now they're moving to Arizona for the awesome weather, retirement, all that stuff. That might be a great option for them on a purchase of another house.
Right. So a lot of my examples use about 50% as just to explain the concept. So if someone is looking to pay cash for their final retirement home of $300,000, because that's what they have available for the whole purpose of not having a monthly payment as they go through retirement, now they can shop for closer to $600,000, make a $300,000 down payment. They get the loan for the remaining $300,000, and that balance just sits there and accrues interest and mortgage insurance, and they don't have to make a payment as long as they live there as their primary residence. They just have to cover their property taxes and homeowners insurance and maintenance.
That makes sense.
Or if they had $300,000 and they wanted to go after that $300,000, but they didn't want to use all their cash, all their liquid position, and they take out 50%, let's say, potentially LTV, keep $150,000 set aside.
Yep. And there's a lot of strategies that have been developed, financial planning strategies, to really make it an estate planning tool, not just something people use as a last-ditch effort to save their house when they're in trouble.
Yeah.
And I've got some great examples and stories that show that as a fantastic example.
So do you think that more or less, do you think the majority of financial advisors out there understand reverse mortgage?
I don't think I'd say a majority. More and more of them are learning. In fact, I put on a class for financial professionals, anybody in the financial professional realm. The next one, I believe, is the 18th of this month. It will be at my office over at Scottsdale Fashion Square, and it's a class for financial professionals on how they can use it, number one, to keep more assets under management, because retirees don't have to dip into those assets as quickly.
Definitely. That's kind of what I was thinking, is instead of using all your liquidity and
That's right.
How about, you mentioned something about FHA protections. I haven't looked at reverse mortgage stuff, since I've been in the mortgage business way back before the market crash or correction, as whatever we want to call it, right? So is it FHA now? I mean, are they all government backed? Is it Fannie still involved? I mean, what?
Well, I'm going to use the term HECM, and HECM stands for Home Equity Conversion Mortgage.
Okay.
If I use that term, it means it's insured by FHA.
Okay.
So there are a lot of protections for the homeowner that FHA provides. So on a traditional forward mortgage, FHA mortgage insurance protects who? Protects the lender in case you default on the loan.
Sure.
Well, FHA mortgage insurance for the reverse mortgage not only does that, but it also protects the homeowner for things like you can't owe more than your house is worth at time of payoff. So that FHA mortgage insurance, say there is a market crash and the balance ends up being more than the value of the home, the FHA mortgage insurance will pay the lender that difference so that the estate and the heirs aren't responsible for it. They're protected.
Oh, that's good.
Yeah. And a lot of these changes started just 3.5 years ago, which is when I really started studying reverse mortgages and thought, hey, this is a really good financial planning tool that people are going to be able to use now because of these protections.
Yeah.
The other biggest one that I know somebody personally who got caught in is non-borrowing spouse protection. That just started in August of 2014, that if one spouse is 62 or older and the other spouse is younger, they can't be on the loan. Well, what happens if the borrower passes away? That non-borrowing spouse can now stay in the home as long as they live there as their primary residence with no monthly payments.
Oh,
Got
that's
it.
awesome.
All right.
Yeah.
Yeah, that's kind of cool, huh?
Yeah.
And then the third protection that I like is that if the heirs do want to keep the house in the family, and it is upside down in value, the heirs actually have first right to buy the house from HUD at 95% of its current value at the time.
Oh, wow.
So another nice little feature.
So these are all things that weren't in place back before the last.
Right.
Okay.
And that's why a lot of
I don't
people
remember those. Yeah. I mean,
a lot of people have a negative perception because somebody told them reverse mortgages were bad, so they adopted that as their attitude.
Right.
Yeah.
When they don't really know about some of these features.
Yeah, for sure. All right. What any other misconceptions before we move on to the next?
Those are really the main ones.
Okay.
It's just about really changing your mindset on using it as a viable estate planning tool. What I call getting deeper into your financial plan faster.
Yeah. Awesome.
Yeah.
No,
Even if it's being used as a purchase.
yeah, for sure.
Yeah.
So as a real estate agent, if someone has a reverse mortgage on their house and they wanted to sell their house, is there anything as an agent that we have to be aware of?
It's just a matter of knowing what the payoff is, and the customers need to know what their proceeds are from the sale. Now, we really want to encourage people to. This product is really designed to be used for your final retirement home.
Yeah.
Now, if you're in a situation where you used it to purchase a home and just situations change, and you do want to sell that and move to another place or have to sell it, it's just a matter of knowing what your proceeds are, and that's a matter of getting your payoff statement. So.
Got it. So nothing hinders the sale of a property.
That's right. Because it's just a lien on the property, like any
lien
other
on the
mortgage.
property.
There you go.
Yep. Yeah.
That's what we said at the beginning, right?
Yeah. See, we're learning already.
We are learning. my head, I'm just like learning all this stuff right now.
Take that beanie off now.
Take my beanie off.
That keeps it all contained.
It's all warm up in there right now. Yeah. So how about share with us how agents are using it right now to help their clients?
I actually teach a class on how to do that. In fact, it's called Doubling Your Commission with Reverse Mortgages.
Doubling my commission?
Just to get your attention.
Sign up.
Okay, we just got their attention.
That's right. And it comes down to that concept of if somebody is going to pay cash for a $300,000 house and you can sell them a $600,000 house instead, if it's the home they really want, and they can still do that with no payments, that benefits everybody.
Got it.
Yeah.
All right. And you're seeing agents are kind of warming up to this whole...
Yeah, and it's a matter of how to present it. It's a matter of having that question ready when you're showing somebody a house that, a lot of couples, there's one person that's the money person, and kind of the taskmaster of this is our budget, and the other person of, but I really want that, or, I'm really in love with that house, and it's just outside their budget.
Yeah.
It's asking that question of, well, what if I could show you how to buy a house just like this and keep that within your budget? If somebody's looking, maybe they're moving from the Midwest and they want to live near their kids and grandkids, but they're limited to a budget that's going to put them in the outskirts of the valley, and that's not where they want to be. It really opens up the options of where and what someone can purchase by possibly doubling their value of what they can shop for.
Got it. All right. Yeah. All right. Oh, let me ask this. So only one person in the household has to be 62, right?
Correct.
So, somebody could essentially buy a big enough house where maybe the other generations of the family live there as well.
Yeah, it's all about who is the borrower.
Doesn't matter, right? It's the borrower.
If the borrower lives there, is their primary residence. That's what we're looking at.
Huh. Interesting.
So you don't have to be an empty nester.
That just gave me an idea.
Or a retiree. In fact, I know a couple of agents right now that I've done proposals for who want to do a refinance just to pay off their existing mortgage to get rid of that monthly payment. Because what does that open up options to do with your money instead?
Yeah. Wow. Okay. Ooh. All right, cool.
That's good stuff.
How about, I know you had some examples that you want to share, right? Some stories, maybe?
Sure. Yeah, just to really kind of show you how it works. I'll start with my favorite one, which is a couple who is moving here from California, buying their retirement home in Arizona. They were going to net $450,000 from their sale, and they found a house that they like here for $400,000. That was, of course, even more square footage than their California house.
Oh, sure.
That's not hard to do. So if they wanted to pay cash for it, they'd only have $50,000 left over from their proceeds. Well, what they were able to do is get a reverse mortgage to buy that retirement home of just over $200,000. So it's just over half of it. Well, actually, not quite half. Well, yeah, they didn't have to use all their proceeds.
Right.
They only had to use half of them. So they actually had $238,000, I think, is what they had left over to pay cash for an investment property in Gilbert, which immediately netted them $1,600 a month in income.
Wow.
So for the same money, they were able to get their primary home, an investment property, an extra $1,600 a month in rental income to supplement their retirement income, all for the same money with no monthly payments.
Wow.
Except covering, of course, the taxes and insurance on the properties.
That's a great example.
Yeah.
Huh. Yeah, I love that.
So and I've got so many of those, and I only stock up real life examples of either somebody myself or my colleagues have done. So it's a great example. Another one was a couple from New England buying a retirement home in a golf community. The home was $600,000. They netted something like $460 from their sale. So they needed, the difference in cash that they needed to pull from other assets. Well, they were able to get a reverse mortgage to buy that house of something like, about half of what the value. Well, let's see. It was they had $190,000 left over at the end of the day to keep their keep more assets under management with their financial planner that they didn't have to deplete. They had $190,000 left over that they could take a vacation, add additional investments, maybe buy in. My favorite is buy an RV.
There you go.
Then they get their retirement home and an RV for the same money with no monthly payments. And just to increase lifestyle. That's one of the main uses. A reverse mortgage today is really the most flexible, customizable way to borrow from your home's equity to buy real estate that maybe you thought you couldn't afford, get deeper into that financial plan faster. Some people even use it to delay Social Security benefits until they max out.
Is credit score a factor to reverse mortgages?
It can be. 3.5 years ago, we also started a financial assessment, which we do kind of a qualifying process. They do have to have a residual amount left over after all their bills, like similar to a VA loan. And as long as they meet that, then they qualify. We have to show that they have enough money left over to pay their taxes and insurance and maintenance to keep up the property.
Got it.
Okay. So that last example you shared, that last client example, if they were Patriots fans, I hope they paid more for their house. No, I'm just teasing. Sorry, Patriots fans. No.
Well, they were converting, so they got out of there.
Yes.
That's funny. Any final thoughts before we move to the next segment? Anything you definitely want agents to know?
It's a matter of having those questions ready of, if I could show you something in that price range and, still not have a monthly payment, would you want to take a look? And of course, learning a little about it is simply saying, call Steve Nesselroad at Pinnacle Capital Mortgage.
Well, why don't we say, so if somebody's watching or listening, they want to reach out to you, how do they do that?
You can reach me on my cell phone anytime, 602-615-0560.
All right.
There we go.
And it all starts with education.
Too, so, okay.
Education is everything. Whether if somebody has a community, they want me to come out, do a presentation in the clubhouse or even someone's home. Real estate classes, financial advisor classes. I'll go anywhere to get the word out about reverse mortgage because it's something I can really be passionate about because I've seen the impact it has on people's lives, in retirement. It's huge.
Definitely. All right. Well, thank you so much for that.
My pleasure.
Information.
Are you ready to get in the ring?
I suppose we got to do the hot seat thing, huh?
Yes.
Here we go.
Absolutely. All right. How about the best advice that anyone's ever given you?
Gail Totten the other day on your show made a comment about never quit, and that really struck home with me. If you have, just don't quit. Do what you do. You might have to learn some new skills and learn to do it a different way, but if you don't quit, you will persevere. So
absolutely. All right. How about your favorite mobile app?
Mobile app. I use the most probably Home Scout. Which is an app I provide for my agent partners that is a direct link to the MLS. People can set up searches and things like that for homes, but it's a way to tap into those people's databases. There's a lot of apps out there where people can request information, get the value of their home or whatever, but if you share it with someone, is there a way that you can tap into that person's entire database? Well, Home Scout, as they share it with people they know, also get added to your database, and it can grow it really exponentially and very quickly.
Got it.
Yeah.
All right. How about a book recommendation?
I like Outwitting the Devil, Napoleon Hill. Just the fact that it was written in 1938
and it's still
and released fairly recently. And he talks about definiteness of purpose and drifting, and that goes into the staying focused and never quitting factor.
I've never heard of that one
that the devil is really our own internal demons that keep us from progressing.
Got it. All right. How about a productivity tool or software that you use on a regular basis?
I've probably used nothing more than send out cards. I've been using send out cards to send personal greeting cards to people for 12 years.
Wow.
And I've never spent a marketing dollar that was more effective than what I spend on send out cards. So
that's probably
personalized.
Works,
so
there's nothing wrong with that. Send a card.
Yeah.
People usually don't send things in the mail anymore.
Yeah. And if they do, they're probably paying too much for it or spending too much time doing it.
That's right.
That's right. We got a final question. Are you ready for this?
Sure.
Yeah.
This is beautiful. What is that, velvet?
All right.
What'd you get?
What's the most adventurous thing you've ever done?
Yeah, here we go.
Well, the one I'm going to disclose is probably skydiving. I've been skydiving several times. It's a habit that if I felt like giving it the time and the money, I could probably get into fairly easily.
Really?
Anybody that hasn't tried it, that even has thought it's on their bucket list, just go do it. It's worth it.
It's not on my bucket list.
It's fun. Yeah. I won't go bungee jumping, but I like skydiving.
Yeah.
Oh, really? Now I'd jump from a bungee. I'd probably do that more so than jumping out of a plane.
I don't know about that.
I don't know. The first time I went,
About the plane?
the plane I was in, you would want to jump out of it. Yeah, it's.
Oh, really?
It was safer to be in the air.
That's so funny. No, I have no desire whatsoever to jump out of an airplane. I would fear that I would pass out on the way down.
And forget to pull the chute.
Yeah.
That actually can happen, and it almost happened the first time I went. The plane was so small. It was a tandem. I had a tandem master who was shorter than me, connected to my back, and I got my leg hung up on the edge of the door. And by the time we got out, we're over the jump site. We had to go. We're trying to get out the door, and I'm so worked up from adrenaline anyway with being my first jump that I got a little bit lightheaded on the way down. And when I landed, I remember the whole thing. It was a great trip, but I was a little loose-kneed there when we hit the ground. So
see, you just solidified my decision.
I'm getting Jeff a gift
I'm not
certificate.
jumping.
But then I went 2 more times after that. So
Yeah.
Crazy.
Yes.
No. Well, thanks, Steve, for being here, man.
My pleasure.
It's been good information.
Really
Thanks,
good.
I appreciate it.
Yeah,
And
really good information.
I tell people to contain me when I'm doing presentations or classes, because once I start talking about reverse mortgages, I can talk about them all day.
All right. Well, we're not going to talk about it all the time.
Well, I get paid to talk about them all day. So.
Yeah, there we go. I'm sure some agents will reach out to you for sure.
Yeah.
All right, well, guys, until next time, and gals, I guess I should say. Until next time, it's Jeff Underwood,
And Joey Sampaga.
and we will see you later.
Adios.
Bye-bye.